Welcome to our Leadership Dialogues, where we focus on rethinking financial services. We have been exploring topics across reinvigorating payments, refreshing customer journeys, and now rethinking the ecosystem. Today, we're focusing on liquidity management, and I'm joined by Brian Nolan, the co-founder of Fintium. Brian, welcome. Thank you very much for having the time to join us today. Before we jump into it, I'm just curious to hear a bit about yourself and a background to your role at Fintium.
Yeah, sure. So Fintium is a platform for bank treasury teams to swap currencies for hours at a time. So we're in the space of intraday liquidity. We're based here in London and started 3 years ago. And my background before that is I worked in banks for 8 years in treasury and liquidity management.
Amazing. Very interesting. So I'm sure you would agree that last year and a bit has brought a lot of change to our lives. And change leads to disruption, but also to opportunity. So just curious to hear your view at where do you think the industry is at today? What has changed in the last year with COVID-19?
I'm particularly focused on the changes that we've seen in financial market infrastructure in the last year. And some of the challenges have been around the reliability of infrastructure. So we've seen some of the tried and tested infrastructure have outages, like in Crest or in even Refinitiv had outages in its FX swaps platform. So we're quite focused on building up more resilience in financial market infrastructure and having less reliance on individual specific pieces of infrastructure as a result of what we've seen over the last year.
I know that Baringa had the pleasure of working with Fintium all throughout different stages of the growth of the company. So it would be interesting to hear what were the drivers for intraday liquidity's proposition to the market and what are some of the emerging challenges in this space now?
In terms of drivers, we knew from when we started the initiative that there was a need among banks to more actively manage intraday liquidity. That's being driven by internal factors and also by regulatory needs. And in the early days, we went out together with Baringa and spoke with a number of banks about their challenges in intraday liquidity and what it could mean to them to be able to manage it more actively by trading intraday liquidity with each other. And more recently, in terms of emerging challenges, we ran a trial together with 11 very large global banks, including NatWest and Deutsche Bank in April 2021. And we heard a lot of feedback and challenges and concerns that we're going to address before production next year. But there are other emerging challenges. For example, JP Morgan announced less than a year ago that they've done their first intraday repo with their Nostro clients, and that's something that they'll continue to do. So it's an interesting, evolving space.
Interesting. So you mentioned several challenges there that I imagine are quite difficult to tackle. So would be curious to know what advantages do you see in forming partnerships between financial services organizations, and what do you think big financial services players can do differently to be more resilient and resistant towards those challenges?
Yeah, great question. So organizations in financial services obviously have partnered together for decades to set up exchanges and CLS, and there have been other great partnerships over recent decades. But what's great and really encouraging for me is to see that organizations are partnering in new and different ways now and over more recent years. A recent example was when industry bodies, ISDA, ICMA and others have partnered together on the common domain model, and they've brought together organizations from Barclays and JP Morgan and others around banking to solve a problem for the industry and at the industry level. So I find that to be very encouraging. But like you said, there is more that can be done. And as I mentioned before, one of the things that we need to create in financial services is to have less reliance on individual pieces of whether it's infrastructure or technology or other factors. So for me, reducing the reliance and increasing the redundancy of individual specific parts of financial services will go a long way towards creating a more resilient and more robust financial services sector.
Fantastic. It's interesting that you mentioned this, because from our perspective as well, what we see at Baringa is that there's definitely a trend whereby financial services organizations start moving away from one approach fits all into more decentralized, more client needs specific ecosystem. And so the question I have for you is, where do you see this evolution going, and where do you think the financial services industry will be in 3, 5, 10 years?
Okay, a tricky question. I completely agree with you that financial services is moving towards more client-centric design and services. And we've seen it ourselves. So we ran a trial with several banks I mentioned earlier, and we have different feedback from different banks in terms of what they want to get out of the platform and how they want to trade intraday FX swaps. And we need to listen to our customers and evolve our platform in line with that feedback. So what we do is we take common themes and try to build functionality where there's a clear need among a group of banks. But we also have built, structurally, we've built our platform to be flexible, so that some elements can be turned on or off to meet the needs of clients. So that's a trend in software more generally, and I think we're going to see it more and more in financial services as well.
Thank you very much, Brian. That was really insightful. It's been a pleasure to have you here with us and explore this topic today.
Thank you for having me.